Okay, so the idea of fixed asset again is a company will have assets that they work with. They have assets in their company, so those are the ones we come to record. So assets can be land, equipment, laptops, machinery, what else? Chairs, cars. It can be chairs and it can be cars, etc. So some assets, I think, and I stand to be corrected, but every asset either appreciates with time or depreciates with time. So the idea behind entry of fixed assets in Astra is one, being able to record the asset, then two, doing the automatic, how do you call it? We have this word, I stand to be corrected again, we call it amortization. It is, the word is big, so let me know it. Automatic valuation, don't put it this way, as in the being able to do the automatic depreciation of the value or appreciation of the value per the schedule that you have set. And the schedules are monthly, quarterly, and annually. That is what we have now. So the third one is being able to do your own manual valuation. That means at any point in time, I can just go and set the current value in there, and then that will go on. So these are the things that we'll be doing. So to do this, you have to first set up a fixed asset account. So that easy to track it. So to do that, you do that at the chart of accounts. So you come to chart of accounts and you do that here. So you go to new account, input the name. Most companies use property, plants and equipment. I mean, most use this name. Then you select a fixed asset. So it is up to you if you want to input it, take this name, fine. Or if you want to separate all your fixed assets per a particular account, so you want to have like land assets, you want to have like equipment assets, you want to have like cars and vehicles assets. So all those, you can do that. Just select a fixed asset and you save it. So once we have this, we can continue. So let's record a fixed asset. So you will come to the fixed asset page under purchases, fixed asset, click new fixed asset. So you input the date that you are recording the particular record. So you input the date. Let's say we are doing it as at January, and then we have this test here to test. So we'll be going by this. So as at January 1st, 0101 2025. So let's say we bought the asset or we are making the entry. Now there are two ways to do it. Either when immediately you buy the asset, you come and input it all. If you're a company on board, that means you already have your assets already. So you are now just coming to record them. Okay, so you just input the date you are recording it. That is we are using in this case 1st January. Now you can specify a tracking number. If you don't, the system will generate one for you. You can also specify an asset serial number. You know, every asset will have it, like a laptop has a serial number. A car, maybe, I don't know whether I use a chassis number or anything. So any serial number for the item. So the asset name. So let's say in this case it is a Dell G16 laptop. 2016 laptop. Okay. So the name of the asset, the description, you can just give it another description that you want. So the vendor, who you bought it from. So you can input the name of the vendor as part of your customers and you come and select. Or if it's not so important, you can even choose the name of your company or just the general supplier and you are good to go. So the cost at which you bought it. So let's say the cost, we bought it for 20,000 and the state, it was a new item. Then you select the asset account that you created. So the next thing is it under warranty or not? If it is, you check it. What is the warranty expiry date? You select. If it's not, you leave it. Then the next phase is whether this record should generate a bill or expense record. So this fixed asset, the question is it already paid for? And has it been recorded in under extra expenses? So when we come to purchases and expenses, is it something that is already here as you've recorded it as an expense? If you have, then there's no need going to check this to do an expense record. However, if it's a bill, if it's an asset that you've not recorded the expense in Astra for it, and then you've also not recorded it as a bill in Astra, and you want to, so that immediately you save this to generate a bill or expense record, then you have to check this. Now to generate a bill, if it's unpaid for or even partially paid, and to generate an expense if it is paid for already, that is in full. So once you check the generate bill or expense record, the next question is, has the asset been fully paid for? That was a paid purchase. That means has the asset been fully paid for? If it has, you check it and immediately you can see there's a change here in the label. So if I uncheck it, you can see there's a change here in the label. So if it's a paid purchase, then I have to select the account I paid from. So then I select the account I paid from. However, if it's not paid, I bought it on credit, or even if you partially paid for it, it's still a bill. So I'll uncheck this and then select the payable account. Now the default in every company that we have an Astra is accounts payable, or unless you go and change it at the company settings. So it will pick the default payable account. Else, if you have multiple payable accounts and you want to maybe put the fixed asset payables into one particular account, then you specify which account you want to pay. Otherwise, the system will pick your default payable account. So let's say this purchase is a paid purchase and we paid from one of our accounts. So let's say we have enough money in our cash here, so that's where we paid from 20,000. Now the next part is you have to specify whether this asset, the value of it, depreciates or appreciates with time. So it's a laptop, so obviously the value will depreciate with time. That's why you check this depreciate. Else you will check appreciate if the value increases with time, something like land. So you check depreciate. Okay. So once you check the next one is what is the expense account, because when there's a depreciation going on, there has to be an expense account for ledger entries. Where will it put the depreciation amount? So you have to select an expense account to put it in. So you can choose any expense account that you have created, or if you leave it, Astra itself will create this account. So the accounts involved there. So there's a fixed asset account, and Astra is for expense. It will create a depreciation expense account as default. So if you do not select any account here, that's what it will create by default. But over here, the company already have a depreciation expense. Now this is an expense account. Okay. Then we have the amortization account. So the amortization account, this place we use accumulated depreciation. So for accounting, that is the account you use to keep the track of the depreciation, so that you'll be able to know at the end of the day what is the accumulated depreciation that has gone on. So if the product was 20,000 and the current value is 10,000. That means the accumulated depreciation is of 10,000. So this is the other account also that will accumulated depreciation. Again, these two accounts, if you don't create it, AstraERP will create it once you save the record and post it. So you can choose not to create that, or Astra will create it for you and you will use it. So once this is set, the next one is whether you want to immediately from the onset create a schedule. So again, like I said, every asset either increases with time in terms of value or reduces in time in terms of value. So the value of a laptop from January was 20,000. The same laptop, if you go to the market today, it might be less in value, and then the value of a land in January might be more in terms of value today. So that is what we mean by depreciation or appreciation schedule. So this, since you've chosen depreciation and you are inputting the record, will you want to create a schedule for it? So if yes, then you check this. If no, then you just leave it be. That means later on you can go and create a schedule. So I check the generate depreciation schedule. So now it is, the next thing is asking me is whether the generation type, do I want a recurring schedule or do I want a single schedule? Now recurring schedule is, that means when the period is due, automatically the system will, if I set the schedule to be monthly, every month from the start date, it will automatically run the schedule. That means if it's depreciation, the system will automatically reduce the value of the product. If it is appreciation, the system will automatically increase the value of the product. So that is recurring. That means it will keep running. If it is depreciation, it will keep running until the product's value fully depreciates to zero. And if it is an appreciation, it will keep running until the date you specify for it to end. So that is recurring schedule. Then single schedule is you are just putting in one value, you are just creating a one valuation record. So one valuation record can then be, you are inputting the current value of the record as at a particular date, or you are inputting the amount at which the record depreciates or appreciates. So for instance, in this case, if you are fresh, if you are a company onboarding, that means you have your assets from last 2 years, and you are now coming to input it. When you come here, you know the current cost or current value of your assets. So you can choose a single schedule, then choose the current value and input the current value there. So that becomes the current value of your asset as at the particular date you select as the valuation date. Or you can also input the valuation amount. Like I said, if it's a depreciation, there's an amount it depreciates per the schedule. And if it's appreciation, there's an amount it also appreciates per a particular schedule. So if you are doing a single schedule and you select a valuation amount, that means if it's depreciation, you are telling the system that this amount I'm specifying, the depreciation amount, is the amount it should go and reduce the value of the fixed asset by. And again, if it is an appreciation, if it's an asset that appreciates with time, you're also informing the system or commanding the system to go and increase the value of the product you bought or the fixed asset by the amount you are specifying here. So if the product was 20,000, like this laptop is 20,000, and then I do a single schedule and I specify that it's a valuation amount, and I go and specify 10,000. Because the asset depreciates with time, what I'm saying is that once I save this and I post, it should run a valuation and reduce the asset's value by the valuation amount of 10,000 that I place here. as at this date, the date I specify here. If the asset appreciates with time, like a land, and then I choose a single schedule, input current value, and then I input an amount, it means that this is the current value of the asset as at this date. So that is the difference between recurring schedule and single schedule. Again, the recurring schedule will run per the schedule you select for a particular number of time. If it's a depreciation, an asset that depreciates, that means it will run till the asset's value is 0. If it's appreciation, that means you will set a start date and an end date, and per the schedule, if it is monthly, every month it will increase by the value every month. If it is every year, it will increase by the value every year from the start date to the end date. So in this case, we are doing a laptop. We say our asset depreciates with time, and we are saying that we want to run a recurring schedule, and we are selecting the schedule to be monthly, and we are saying every month reduce the asset value by 1,000. Starting from we inputted the asset on 1st January, we are saying start from 2nd February. So from 2nd February, the assets, we expect that 2nd February, the assets will start reducing in value by 1,000 cedis every month. So once we have set our fields or our record, then we just see changes. So again, in Astra, we always have this two-step process where you input a record and it is there as a record. Then you have to now come and do something to it to let it affect your whether inventory or account ledgers. So in some places, that is how it is. So once you do this, you can go back and edit, or if you are good to go, you just click post. Good. So once you post to this asset, what do we realize? We realize that immediately the current value has become 12,000. What does it mean? We bought the asset at 20,000, and we said it should depreciate every month by 1,000 cedis from 2nd February. So from 2nd February to today's date is, as the time I'm doing the video is 29th September 2025. So from February to 29th September. So let's see, that means 2nd February. So let's look at the schedules. You can just click here and look at the schedules. Okay, so this is it. So you see, automatically the system will generate all the schedules for you until the since the depreciation, to generate all the schedules for you till the value of the product runs to 0. So according to this, 2nd February, it has run it by 1,000. That's why we have here. So you have posted, yes. So it has run that schedule. It has reduced by 1,000. 2nd March, it has reduced by 1,000. Depreciation of assets by 1,000. 2nd May, June, April, May, June, July, August, September. So you realize the last, because today's date is 29, or the date as at this recording is 29th September. It has run the last depreciation on 2nd September 2025. Today is 30. Okay, sure. Anyway, so that is it here. So these ones will run. So the next one we're expecting to run is 2nd October. So when it's 2nd October, the system will automatically run this. So these are the schedules that we have. That is why, so if you calculate, that is this 1,000, 2,000, 3,000, 4,000, 5,000, 6,000, 7,000, 8,000. That is 8,000 worth of depreciation, and that is why we have the current value as at 12,000, because the purchase cost we said was 20,000 minus the 8,000 depreciation, and we have the current value to be 12,000. So this is depreciation for you. So So this is it. Now let's do disposal. So let's say, okay, this is the current value. We want to dispose of the asset. So we go to dispose asset. So we select the date we want to dispose of the asset. We can use today's date or the date. Now these are the scenarios, the disposal scenarios. One is the value of the asset has fully depreciated and you want to dispose it of. The next one is you want to sell the product because you no longer need it. And the last one is you want to let go of the product for unforeseen circumstances. It could have been stolen, damages, or any other reason why you are letting go of the product. So in this case, the asset has not fully depreciated. As we can see, the current value here is 12,000. So we want to sell the product. Now, if you want to sell the product, that means you are getting money for it. So in this case, which account are you receiving the money? Since you are selling it, you have to specify the account you are receiving the money into. So let's say we are receiving into the cash in hand. Now there's an account here called an asset gain or loss account. It's an income account. We used to track the gain or loss that we've made on fixed assets. Again, these are one of the things that if you do not select it, Astra will create for you. So the Astra will create an account called asset gain or loss account, which is an income account. So these are one of the assets that Astra will create for you. So if you don't select anything, again, for this company, they have it, so you just select it. Again, you can have multiple of them in case you want to put them into different accounts. Then, okay, so then you input the amount you are selling the product. Now, you know, the amount is 12,000. So it's either you sell the product at the same price, below that price, or above that price. So in this case, I'm a company. I want to make some profit from that fixed asset. So I decide, okay, the asset is 12,000, but I'll sell it at 12,500. That's the current value of the asset. So you can input a memo there, or you just leave it be. Okay, so I sell this and I dispose it off. Okay, so now my asset is disposed and gone. That's why I can see reverse disposal here. So this is the disposal record. So you can see reverse disposal. So in case you make any mistake, you can always click on the reverse disposal to come back to. But once you reverse disposal, you still have the, how do you call it? You still have the depreciation and everything, the schedules there. So these ones will not run again because you have disposed of the asset. So they will not run. No matter what you do, they will not run. Okay, so that is it. So if you make an error, you have to if you dispose the asset, you have to reverse the disposal first before you reverse the posting, so that you delete the schedules. Then you can go and do whatever change you want to do. So yeah, so that's fixed assets disposal. I mean, what we did for the depreciation, you can do the similar thing for appreciation. It's the same logic, just that one increases in value with time, one reduces with value in time. So that's the other thing is, at the end of the day, you want to look at your ledger. Okay, so let me see whether this guy, you have to do a report, you know that. Why would I think that? Let me see. Okay, our fixed asset has run to 0 because we sold it off. I should have probably not sold it and wait so that you could see the fixed asset value. So fixed asset has gone to 0. Let me look at the profit and loss account. Good. So you can see that the other income, asset gain on, because I sold it for 12,500, and then the value was 12,000. I've gotten a income of 500 cedis. Okay, so I came to reverse the disposal. Then just to let you see the value if it hasn't been disposed, we check our balance. You can see that the fixed asset disposal value was 12,000. So this is it. So this is fixed assets and fixed asset disposal. At the end of the day, what is left? We have to do a depreciation report. We've not done it yet. It's one of the to-dos. We have to do a depreciation report over here so that you can view all your assets and their depreciation. I think that would be
within the 20 days.